Good weekend, all. Ira Epstein with your weekend edition of your SPDR ETF stock market wrap-up, and this wrap-up is for the weekend of August 4th, 2023, jobs report day. Remember, in this report, we're going to look at the weekly charts and try to give you some ideas there. Well, by day's end, none of the stock indices held up. They had a chance. They got a big pop. They looked at the jobs report, and the market went, wait a minute here. We're into the 180,000 plus number. We had a revisionment off the last report. We've lost 49,000 jobs off the revisionments when you take a look at where we're at. But when you look at the wage gain, we're still up 0.2%, so that's persistent with it. Then the market's dealing with earnings. And Apple, which is, a dominant force in the market, down today very hard, and that's carried the day with it by day's end. And the market by 1 o'clock, 1:30 Central Time, faltered, and then it began giving everything back. So we are still in that part of the market where it's weak. Speaking of that, before we get into the charts, I want to bring something up here. I told you I was going to do a special report for you, and I have done it. So how do you get to this special report? Well, let's talk about what I did. I went in and I said, what if we take a look and go to the seasonals from now, right now, August 4th, right up to December, when we supposedly get the Santa Claus rally. So I went in, first I start you off and give you the months. And I go back to 1928 with the months. Which months are typically the most positive and negative in the stock market? And I'm talking the indices that go back ideally that far. Not all of them do, but to give you an idea with that. How do you get to that? What do you see? So I start there, and then each of the indices I break you down with 20 to 27 year long cycle. Depends how much data we had, 15 and then 5. I put them on and off the chart, and I walk you through things, and I show you the correlations that are there. So for those of you that like seasonality in a market, this is going to be heaven for you. How do you see it? It's simple. All you need to do is take your cursor, move it right up here, give a click to the link that you see, and you just sign in, and you will get the report. Can I make it easier? I don't think so. So take the time out, take a look at that. Now let's get back. So in the marketplace, it's a pretty mixed bag. Yeah, some green and red. We see that they're all over the board through here. Coin was down pretty hard today. We've been recently covering that. You can see Tesla down $5 on the day. Rivian gave back $1.25. GM giving money back. We've taken up to covering Intel, and that market's done well. But what's well? Well, let's take a look. So this is a weekly bar chart. That's all that we're looking at is 1 week's performance on each one of the bars. The pattern of the chart has been higher lows, higher highs. That's bullish. One of the resistance points in the market is the 100-week average of closes. Another is the 200, with bigger support coming in at the 3230 area. Trying to get up and over the Bollinger Band, this black dashed line, the set of them. You only stay over them 5% of the time. So if you're trying to buy Intel here thinking, oh, I'm going to get the big pop in the market, no, you're not. The odds don't favor it. The odds favor that when this happens, if you go back, the market has trouble with it. Now, the longer a market goes sideways, especially sideways, and this isn't quite sideways, it's got a bend to the upside, then you can get what we call the breakout. You widen the band. This is not that pattern. So yes, I'm friendly to the market in the sense that you've got the higher highs, higher lows, and you're over the 18-day average. If you fall back here, I'll look for support because you are overbought at the 18-day average. How do you correct an overbought market? You either go up and you get both these numbers going sideways over 80 and you lock in an embed, which means the market leaves the overbought condition and locks in a major bull trend and typically tries to move out. It did this numerous times in the bearishness when it got under 20 and did that, and you can see what prices did. You're not there at this point in time. In coin, this is something new that we are covering. One of my clients, subscribers, asked me to do this for him, and I did. So what we have here is a market that got up and over the upper Bollinger Band. You only stay out of it 5% of the time. You're going to pull back. When you pull back, what do? Well, the first thing I look at whenever this happens, I look to see what is the market doing in overbought, oversold area. Overbought, over the upper Bollinger Band, the odds strongly favor that what is about to happen is this market's going to start giving up, if you will, and pulling back into the band. Are we trending? We are not. You have a lower low, higher high pattern. Next, KRE. Now, these are the bank stocks, and very frankly, they have been doing well. If you're not recognizing that, shame on you. This was the big break, and the market starting back here, once this wore itself out, actually, you've got to go back into the May timeframe. The market came alive, and it's had a nice rally. We've seen some merger and acquisition going on. The banks have been able to retain their clients. The problem is that interest rates have gotten up so high that some of the CDs are paying out near 6%. There's not a lot of juice in there for the banks that have to do that to retain clients. If you're going to pay on overnight balances in a checking account, you're not given a 0.5 percentage point to keep these people. You better do something. So we came back up. They did this, but you're overbought. You're at the Bollinger Band. No, I'm not excited. Am I friendly? Absolutely. I'm much more interested if the market got back to 42.34 than I am buying an upper Bollinger Band. Then we get to the iShares MSCI, China. And this has come alive. Now, as we look at what it's done, I think it'll fail against the upper Bollinger Band. One of the problems that I'm having with China doesn't mean you're having it. I am having. They keep talking the talk. They don't walk the walk. That is the problem they're doing. They did it again this week numerous times. They're going to take care of the property developers. They're going to back bond issuance so that they can pay bills and so on. We get no details. So it's like saying at home, well, we're going to break in the back of inflation. We're going to do this. Well, how are you going to do it? At least we know we're raising interest rates to do it and what we've done. But just saying, for example, no, we're going to put an end to that. We're going to resolve it. How? And copper and this market have both responded favorably to just them saying that. Again, they got to walk the walk, and they haven't done it yet. Bad quote just came in. Now it's better. This is how the vendor is sending it. I'm sorry about that. You can see there, as they're sending the quote, it's going sort of crazy there. We'll skip that. Let's go to XLE. Higher lows, higher highs. What do you think you do the first time you hit an upper Bollinger Band? You take money off the table. Now, are you embedded? No. There's a way to do this when you're embedded or not embedded. Number two, what you had this week coming in is you saw that first, the Saudis said, because the Saudis are right now meeting with 30 countries, trying to get as many of the 30 that they've invited to show up in Jeddah to come up with some solution, recommendations how to end the war between Russia and Ukraine. But during the week, there was an OPEC meeting. And at that OPEC meeting, it was very short, I don't know how formal it really was, the Saudis said, hey guys, we're going to extend our production cut 1 million barrels, and world, listen to this. If you try to break oil prices in any manner, we'll deepen the amount of the cut. That's pretty threatening. Then to back it up, Russia joins in, and they have been doing 500,000 barrel a day cut now. They said we're going to cut an additional 300,000 barrels. So the two have finally gotten together. And behind the scenes, I have told you for 3 months when this began, if the Saudis are going to carry that 1 million barrels, they're going to talk to Russia, and they're going to make certain Russia joins them with it. Why would they just cut for the benefit of Russia? There's a backdoor deal that happened there, and Putin is coming in, doing his share with it, and the two of them are taxing you, and that's their goal. They want to take the money from you to make their economies work. Putin needs it for the war. The Saudis realize that fossil fuel days are numbered. They're not ending tomorrow. They're not ending in 10 years, but they're numbered. So they're investing everywhere. Soccer. I can go on and on. They want to buy F1 teams. It just goes on and on as to what they're going to do. But this is the diversification. What about cars? Lucid. I can go on and on where their investments are going. Regardless, as a market technician, you can go higher. There's no reason to be bearish here, but you fix an overbought market by either getting it to embed or correcting on the way down. Do I think the market's still a buy on breaks basis this chart? Absolutely. When we look at UUP, this is the dollar. So the dollar has got to make its mind up. What is it? It's gotten a rally. To really break the downtrend, we've got to get back up and over this high, 28.60. Without it, it's a nice bounce in a market. It stopped the downtrend. It's giving you upside bias, but the swing line is down. Even if you take out 28.60, what you do is you no longer have the lower highs, lower lows, but you haven't proven to me what you've got. And that's what I'm waiting on. Gold, how does gold go up when interest rates are staying this high and the dollar has been this strong? That is the headwind that gold has. I don't think any of us doubt that we're still seeing inflation pressures. Example, today's wages. Example coming up, you know that September 14th or 15th is the end of the talks between the unions and U.S. automakers. One of them is going to be picked and the unions are going to strike it. They're never going to give in on the first round of demands that the union demanded, okay? But the union did the right thing. To start off, you ask for the moon, and then you decide how much closer to Earth are you willing to take, whatever the deal can be made at. In GDX, the miners, well, if the gold's got a problem, why do I want to own the miners? I don't, but you are oversold, you're not trending, you're sort of drifting in sideways action right here. In Tesla, once you lose an embedded reading and you just did it. Now, what do I mean by just did it? Let's go back if we could a little bit, see if this will do it. It's not going to let me do it. I wish it would. Sometimes this won't do that. But to make a long story short, what the market's done is it lost the reading. You got a 74 reading. It's the first time that it's gotten back under. The goal is not the 18-day average of closes. You're at the goal, 252. That doesn't mean you can't extend down, but don't get trapped in. If you've taken my course, it's the closest main moving average. AMC. I was thinking today, I saw Cinemark. They had good numbers. They've proven that people went back to the movie theaters, but they're going to, how do I explain it? I owned a movie theater. Not an investor, I owned a movie theater, all right? I had partners in it, but I was the key guy. I had a partner that ran it. He knows the movie theater business, and we were supposed to do well. I don't think we ever made money. That's the reality. We thought they'd buy enough popcorn. We had a discount movie theater. They were so frugal, the people, they didn't even buy that. Can't make money doing it. Well, there is a place for movies. The question is, how many screens do you need in these? What kind of movies are going to get them? AMC's problem, and there's many of them, is that number one, as the summer ends, you don't get big movies coming out now until we get into the November, December timeframe. Number two, what are they going to do? They keep wanting to dilute the stock. They want to float more. They want more because they've got so much debt. This is a company with billions in debt, not hundreds of millions. We'll see. I am not the biggest fan of this company. In Apple, correction time. Lost the embedded reading. The goal, the 18-week moving average of closes. And in Google, well, this has performed beautifully. It either embeds or it corrects. It's got to prove what it can do. But right here, a bit of a problem. So I want to remind you to get the special report on the stocks, move your cursor right to the top up there. You'll see an icon. Give it a click. Enjoy the report. It's about 15 minutes long. It really covers a lot of everything out there that I can see in what the seasonal tendency is between now and December. You take care.